Hey there! Welcome to Whiteboard Invest, your number one go-to source for clear and concise investing knowledge, explanation, and news updating daily. Let's dive into the latest buzz from the financial world, shall we?
So, the market's looking pretty gloomy today, right? It's like a sea of red out there, and it's not just the crypto market feeling the blues. Speaking of crypto, Bitcoin's been on a roller coaster today, dipping below $60,000 before bouncing back to around $64,000. It's like the market can't make up its mind. Now, if we zoom out a bit and look at the bigger picture, we've got to ask ourselves, is this all as significant as it seems? We're also keeping an eye on the cash flow, which is hinting at a red day for investments. Should we start worrying? Well, that's the million-dollar question. On top of that, there's buzz around Ethereum and Bitcoin. But let's not forget the big news from Hong Kong. There's a fresh piece of legislation on stablecoins making waves, proposed by the parliament today. We're going to dissect what this new stablecoin regulation means and how it could shake things up. So, stay tuned for my video later, where I'll spill all the details on these headlines and more. It's going to be a juicy one. So, you've probably noticed oil prices are slipping, right? Just the other day, oil contracts dipped and everyone's wondering why. Well, the big talk of the town is this guy John from the central bank. He basically said, "Look, we're not rushing to cut interest rates anytime soon. No solid proof to go all in on that decision yet. The market was like a kid before Christmas, expecting a bunch of rate cuts this year. But now, it seems we might get just one or two, and not until the end of the year, somewhere between September and December. But here's the kicker. Even though the market's been all over the place with its expectations, from 6 cuts down to maybe just 1 or 2, the cool thing is, assets like stocks and Bitcoin have been doing their own thing. They've been adjusting, sure, but they're still growing. In fact, they've hit some fresh highs recently. So, what's the takeaway? It's all about the long game. Short-term things might look shaky, but the big picture's still looking pretty solid. Well, the big brains over at Bank of America are weighing in, and they're kind of playing it cool. They're not totally sure, but they're hinting that the Fed might hold off on slashing interest rates until next March. Yeah, even though everyone's been crossing their fingers for a cut in December. Now, this has got the markets all jittery. Take a look around. Stocks, gold, oil, crypto. It's like a red tide out there. People are seriously starting to sweat over what the Fed's next move might be. If they don't cut rates soon, we could be staring down the barrel of a financial downturn. And get this, even with all the political drama going on in the Middle East, it's the Fed's decisions that are stealing the spotlight today. It's like everyone's forgotten about everything else. But here's the deal. While these short-term stories get all the attention, it's the long-term stuff that really drives the market. You know, supply and demand, that's the real MVP. So we've got to keep our eyes peeled for the news that'll stick around and actually make a dent in the long run. So, JP Morgan, you know, the finance giant, had us bracing for a financial storm in 2023. But guess what? The storm never hit. Fast forward to now, and they're singing a different tune, saying there's a decent shot at a smooth economic landing, not a crash. But here's the kicker. Even these big banks can't seem to agree. While JP Morgan's got a bit of optimism, Bank of America is still waiting for the other shoe to drop, expecting a downturn. It's like one minute everyone's predicting doom and gloom, and the next, they're all sunshine and rainbows. Makes you wonder if anyone really knows what's going on, right? And that's the heart of it. The market's a beast with its own mind, influenced by a zillion things. Trying to predict it is like nailing jelly to the wall. The best bet? Focus on the long haul, keep your ear to the ground, and don't get too hung up on the day-to-day. Oh, and if you're looking for a Netflix recommendation, Three Body Problem is a solid pick. It's this wild sci-fi show that's pretty much a metaphor for the unpredictability of our financial world. Just goes to show, in the grand scheme of things, we're all just trying to make sense of the market's many moods. So stay informed, understand the trends, and remember, it's all about playing the long game. So just yesterday, we got wind of some not-so-cheery news. The unemployment rate has crept up to 4.2%. That's the biggest jump we've seen since the whole pandemic saga began. But wait, there's more. Inflation, that sneaky beast, has dipped a tad to 3.2%, but it's still playing hardball, staying a smidge above the forecast of 3.1%. And if we're talking about the core stuff, minus the energy, grub, booze, and smokes, it's sitting at 4.2%, stubbornly higher than the 4.1% guesswork. Now, the bigwigs over at the central bank are in a bit of a pickle. They're like DJs at a party, trying to find the right tune. All of Europe's itching to dial down those interest rates, but it's a tricky dance. Crank them up too high, and you might cool down inflation, but you also risk throwing the economy into a recession-shaped ice bath. It's a real head-scratcher, and the folks at the bank are walking a tightrope, trying to figure out the best move. They've got to juggle getting inflation back to where they want it without tipping the whole economy overboard. So, that's the scoop from the UK. It's a delicate balance, and everyone's holding their breath to see how it'll all pan out. Stay tuned, because this economic drama is far from over. So, Goldman Sachs has been talking about Bitcoin, and they've got some thoughts. They're saying, if we want to see Bitcoin continue to climb, we need to keep an eye on the cash flowing into those Bitcoin funds in the US. It's all about the green, Now, there's been some chatter about a Bitcoin spot ETF. That's like a gateway for more money to pour into Bitcoin. Even if it doesn't get the green light in the US early this year, Bitcoin's growth isn't just going to hit the brakes. It's got its own cycle, and a spot ETF would just crank up the volume on whatever's happening, good or bad. Long term, having a Bitcoin spot ETF is like opening the doors wide for new investors. It's a big welcome sign. But not everyone's cut out for the crypto ride, right? Some might bail when the going gets tough, but others will stick around. And that's fresh blood for the market. But here's the scoop. Even if the market's in a funk, Bitcoin's got this limited supply thing going for it. We're talking only 21 million coins ever. And with the next Bitcoin halving, the number of new Bitcoins mined each day is going to drop by half. So, if someone's gobbling up 450 Bitcoins daily, that's going to make things tight supply-wise. Goldman Sachs and I are on the same page here. It's not just about the short-term news-making waves. The real deal is supply and demand. Think about it. A year from now, 2 years, 5 years, will the demand for Bitcoin be higher? If you believe it's going to be more widely accepted, then you're looking at a trend that's your friend. So, what's the bottom line? Keep your eyes on the horizon, not just on the here and now. Bitcoin's playing the long game, and if you're in it, that's the game you should be playing too. Let's take a stroll down memory lane and chat about the financial market roller coaster we've been on. Remember back in 2017 when Bitcoin split in two? That was wild, right? And China's tough stance on Bitcoin really shook things up. Fast forward to the US presidential elections, both in 2020 and the recent one in 2024. Everyone was buzzing about how the outcomes, whether it was Biden or Trump winning, would impact Bitcoin and our wallets. Then there was the whole election fraud drama that threw the markets into a frenzy, not knowing what was true, or not just added to the chaos. And who could forget the pandemic? Governments were printing money like there was no tomorrow, trying to keep the economy afloat. Some TV experts were convinced we could dodge inflation if the economy stayed strong, despite all that extra cash floating around. But guess what? Inflation still hit us hard. And amidst all this, the Ukraine-Russia conflict flared up, sparking all sorts of predictions about gold, oil prices, and Bitcoin's fate. Despite the ongoing war, the market's chugging along, growing and evolving with each new challenge. So, what's the takeaway? The financial world's a complex beast, influenced by everything from global events to political decisions. It's a reminder to stay sharp and consider all the angles when navigating these unpredictable waters. All right, let's chat about Bitcoin and its recent roller coaster ride. So, Bitcoin took a bit of a nosedive recently, dropping to 59.7K. It had some folks biting their nails, but before you could say blockchain, it bounced back up to $61.63K. It's like Bitcoin just shrugged off the dip. Now, if we take a stroll down memory lane to about 4 weeks ago, Bitcoin was the talk of the town, hitting a high of 73.9K. Since then, we've seen a correction of about 16.6%. And on the day of the dip, it was a 19% slide from that peak. But hey, this isn't the first rodeo for Bitcoin. We've seen these kinds of adjustments before, and they're part of the game. Think of it this way. Bitcoin's been on a hot streak for 7 straight months. It's like a marathon runner. After a long sprint, you got to take a breather. This recent price adjustment? It's just Bitcoin catching its breath before the next leg of the race. And for a bit of market wisdom, let's peek at the CLNO index. You know, that nifty profitability metric. It shows us that when Bitcoin's price adjusts, so does the percentage of profitable trades. It's like the market's way of keeping things in check, making sure everything's balanced. So, what's the moral of the story? Bitcoin's price might jump around like a cat on a hot tin roof, but the market's got a good head on its shoulders. It knows how to handle these ups and downs. As long as we don't hit a major financial snag, Bitcoin and its buddies in the market will keep on trucking, no matter the weather. And that's the buzz on Bitcoin's latest adventure in the wild world of crypto. So, what's the takeaway? The financial world's a complex beast, influenced by everything from global events to political decisions. It's a reminder to stay sharp and consider all the angles when navigating these unpredictable waters. So, you've seen the crypto headlines, right? It's not just the tokens feeling the blues, the energy sector's down too. But let's talk about the big fish in the pond, the NFTs. Take the Bored Ape Yacht Club, for example. Their floor price? It's taken a nosedive from a whopping 119 Ethereum last April to just 11.69 Ethereum now. Ouch! And it's not just the apes. CryptoPunks, those pixelated OGs of the NFT world, have also hit a rough patch. They peaked at 112 Ethereum back in October 21, but some are going for a mere 40 Ethereum or less today. That's the lowest since August 21, and we're talking a drop of over 90% from the top. Now, celebs like Kevin Hart and Justin Bieber, they've cashed out their NFTs for way less than the buying price. It's a tough scene, but hey, that's the market for you. Full of surprises and not for the faint-hearted. So, BlackRock just dropped a quick explainer vid on Bitcoin. It's a snappy 1 minute and 15 seconds long. Now, you might hit play and think, yawn, what's new? But hold up, it's not for the crypto-savvy youngsters. This one's for the folks who might still rock a flip phone and prefer their news on paper. BlackRock knows their audience. They've got clients who are probably asking, what's this Bitcoin jazz all about? So they're breaking it down, making it digestible for those who aren't scrolling through crypto Twitter all day. And it's not just talk. These clients are storing Bitcoin with BlackRock. They're in the game now. This isn't the first time BlackRock's done something like this. They've been here before, guiding their clients through the Bitcoin haven and Sparty, whatever those might be. It's all about keeping everyone in the loop, no matter their age or tech know-how. So, while the video might not win any Oscars for excitement, it's doing its job, educating and bringing everyone up to speed on the digital gold rush. And who knows, maybe it'll help someone's grandpa become the next crypto whiz. That's the lowdown on BlackRock's latest move in the crypto space. Some Bitcoin miners might be hitting the end of the road, and there's talk that this could spell trouble for Bitcoin. The fear is that if enough miners call it quits, who's left to keep the network safe? Plus, with fewer miners, the network might slow down since the mining difficulty's still up there. But here's the scoop. The seasoned mining pros saw this coming. They've been around the block, chain, and knew to sell off some assets before the Bitcoin halving. That time when mining rewards get slashed. They've been stashing cash to weather the storm. So, while some miners are bowing out, the ones with the know-how are playing the long game. They're waiting for the mining difficulty to drop, which means they could strike it big with less competition. It's all part of the crypto cycle. And hey, since March, The sell-offs cooled down because the smart ones sold early. It's a bit of a miner's chess game, and the grandmasters are making their move. Next, let's chat about the Bitcoin spot ETF scene today. It's a bit of a downer, honestly. We're seeing some cash flow out, and it's not just a trickle. Today alone, we waved goodbye to $165 million. The usual big sellers like R-Scale are laying low, only letting go of about $133 million. But then, out of the blue, Arvest steps up and offloads a hefty $42.7 million. And get this, for the first time, BAYC's fund is seeing red, with a $7.3 million departure. Meanwhile, BlackRock's still pulling in some dough, but it's just a modest $18 million, a drop in the bucket compared to the outflows. So, what's the deal? Is it panic time? Nah, it's all part of the game. These funds have been raking in the cash, with a cool $12 billion since January. Sure, today's a bit gloomy with more money heading out than in, but that's just how the cookie crumbles in the crypto world. Keep calm and carry on, right? Let's dive into the Bitcoin and Ether ETFs that are about to hit Hong Kong. The buzz is that by the end of this month, around the 30th, things will kick off. But there's a bit of skepticism, you know? Bloomberg was initially not too optimistic, thinking the interest would be weak since investors in China aren't in the game yet. They pegged it at about $500 million a few days back, but now they've bumped up the estimate to $1 billion. Some folks are dreaming big, throwing around numbers like $25 billion. But let's stick to the more conservative $1 billion for now. We're all hoping they've underestimated it again, just like with the Bitcoin spot ETF. Remember that. They thought it would pull in just $10 billion, but boom, it's already at $12 billion in just 3 months. So they're saying $1 billion for the Bitcoin and Ether ETFs in Hong Kong, but who knows, it might be way more. And hey, Hong Kong's already buzzing with Bitcoin vibes. Just yesterday, I mentioned those flashy ads popping up for Bitcoin ETFs, and there's even a Bitcoin conference being promoted as we speak. It's all over the screens, getting everyone hyped up for what's to come. Finally, we're spotlighting a fresh crypto bill from Senators Lummis and Gillibrand aimed at tightening up the stablecoin market. The bill proposes that banks and companies can issue stablecoins through separate subsidiaries, ensuring they're backed by solid assets. No more algorithmic stablecoins after the UST incident. It demands a 100% reserve to back every stablecoin issued, and for regulatory oversight, companies with a market cap under $10 billion will be state-regulated, while the big players will answer to federal authorities. This bill could be a game-changer in ensuring stability and trust in the world of stablecoins. Stay tuned for updates as this bill makes its way through Congress.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.